Good morning. Today is Friday, September 19th, 2025, and happy Friday. So let's get the ball rolling. So first of all, the TSX closed again all-time high by 0.5%, nearing its session highs once again. So the mood is party on, have fun, because rates are coming down, everything is great. But remember, if you go back 100 years, the roaring 20s were great until 2029, right? So we may need to look at the history books once again, just so that we're prepared to what's to come, possibly. Well, regardless, yesterday's winners were tech, financials, utilities, healthcare. Losers were communication, energy, and real estate. So obviously, more people, like the investors, are focused on growth right now more than anything else. But that's anticipated because the rates are coming down, right? Bond yields as well are coming down. The 2-year finished at 2.48, which came down obviously. 5 years at 2.74, 10 years 3.16. So pretty much overall, it just keeps coming down, which means relief on the fixed mortgage side as far as mortgage people are concerned. But then overall, there are macro reactions to this as well, right? But beyond overall, rates are coming down. That's what we are concerned about, right? So the next thing is today's focus is Halton in real estate spotlight. Asset sale ratio was about 1.035, which means $1 million listed, sold for $1,035,000. So that means $35,000 over asking, which is a tad bit more for my concern right now. But then it's numbers right now for as far as I know, right? So average sold price was $1 million. Listings to sales ratio, which is my personal favorite indicator, which was at 21%. New listings were up by 4% from the week over week, but year over year is down by 5%. Power of sales, our newest indicator, there was only 4 power of sales in all of Halton for the last 7 days, which again is a number right now. But then as we go on for the next few months, we'll see if this is a good number or bad number, and then we can make a judgment call then. And obviously 2 days ago, the Bank of Canada did cut its rates. And because of that, now we are starting to see 3-something mortgage. So that means it could be a 3.59, 3.69, 3.89 mortgages. We don't see any more 4% as much anymore, which is really good. So it's more so of a psychological barrier for the buyers. So now we see a lot more buyers coming into the market. That means they're not buying right now, but they're looking at homes. They're starting to think about putting offers, and more importantly, they're getting more pre-approvals from the banks when the rates are coming down, right? The other thing I want to talk about, which is a little bit more concerning to me, is jobs and EI. So there was about 552,000 people, Canadians, who went on EI in July, and that's up by 13% year to date. That's a lot of people, right? And the majority of them were core age women, which is 25 to 54 years of age, went up by 23%, and the biggest jumps were in Quebec by 19%, Ontario by 16%. So pretty much, even though rates are coming down for the mortgages, and fixed rate or variable, whatever it is, and prices are affordable for real estate, if you don't have a job, you really can't pay for a mortgage, right? So that's a little concerning for me right now, but let's see what happens. The next thing I want to talk about is Canadian Climate Institute warns the 2030 emissions target is not going to be reached, only because oil and gas emissions went up by 1.9% in 2024. So personally saying, I do want to give a better future for my kids and grandkids and so forth, and leave a good planet behind. But the reality is I need to survive today. And I think everyone probably feels the same way. It's not that we don't want to use better energy options, but reality is it's what's affordable right now. And in trade policy, Carney met with a Mexican president about the CUSMA deal with the US, because that's kind of urgent right now, because that's the next biggest thing that will affect the markets and the real estate and pretty much the whole world. And finally, OSFI is considering changes that could free up to $1 trillion in bank lending. And this matters because potential flood of credit could ease financing. So again, that's something we have to wait and see on OSFI side. But until then, happy Friday. Don't party too hard. See you guys back on Monday.